Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Sunday, October 27th, 8:14 p.m., coming to you from Fort Lauderdale with this weekend's Revere Roundup weekend walkthrough. So jumping right into it, we are still seeing the four green up arrows in the GROTECTION gauge, which means we are in the mindset of growing. The Dow, the mid caps and small caps, we do have a sub yellow arrow because they're below their key 8 and 21 EMAs, and they're definitely relatively weak versus the S&P and the Nasdaq. So jumping right into it, let's go through the S&P 500 as usual. So with S&P last week, October 10/23, we had a shakeout back to the 21 EMA, closing back above it. Then next day we saw inside day. Friday we gapped up, wedge popped, but then closed below the 8 EMA. So essentially, pretty much chop in the last week, frustrating both the bulls and the bears. RSP is a bit weaker. Outside day reversal Friday, distribution as well, back below the 21 EMA. The Nasdaq, we're up about 0.17%. We do have a 3 weeks tight, followed by the previous 3 weeks tight. So really tight action now, and what we're looking for is taking out 500. And once we take out 500, we'll likely see all-time highs here. And I suspect that momentum will drastically improve, especially when the Nasdaq gets in the gear. QQEW also gapped up, reversed, still close above the 8 EMA. We did wedge pop above this flag, and it still looks great. But so far, it's a failed breakdown. We just need some more time before heading higher. The Dow, outside day reversal as well, rejected the 8 EMA, so closed below the 8 and 21. Huge support, this 41,800 level, as well as the 50-day that's coming up to meet it. Mid caps, outside day as well. Pretty similar echo with the RSP equal weighted S&P and the Dow, and then the Russell was similar as well with an outside day below the 8 and 21. But this could just be pre-election chop and volatility. There's nothing wrong with these charts. We are just below the 8 and 21, but that doesn't mean we're going to fall apart here. It could just be a shakeout or a completion of the right side, especially in the mid caps and the Russell. Going on to the VIX. VIX is back over 20. Historically, we've talked about before the election, the VIX does stay elevated with uncertainty. We also had some tensions between Israel and Iran that have calmed down so far, but we don't want to see the VIX get too high. Sitting around 20 is fine, and then let's see if post-election we'll see the VIX come down to 15 or sub 15. Now the dollar continues to be strong since rates are strong. I'll head over to the trading view now and talk about rates. 1-year yields, 2-year yields, 10-year and 30-year are all rising. Hence, bonds are, since they're inversely correlated, they are falling. And so far, the 10s and 2s yield curve is uninverted with a positive 0.14 spread. Looking at the dollar, like what we had before, had a couple small flag here. It seems like we're heading higher as well. And this continues to be a potential headwind for the markets. Maybe we do find some resistance once we come up to this declining tops trend line, and seeing a reversal and a new downtrend in the dollar could be a tailwind for equities. It should be. Gold continues to soar to all-time highs. We had an all-time high weekly close last week, as well as putting an all-time high on the daily as well. Silver broke out and now just flagging above the base. I want to see this quickly get to new highs to exhibit some tennis ball action. Let's talk about Bitcoin. And this is where I want to focus a bit, because I do think, and I've talked about it all year, that I think it's one of the fattest pitches in the markets, and it's really shaping up here. I talked about it in the podcast, but I'll go over it one more time. So we'll start over at the 3-month, which is the quarterly. We have an inside month right now, trading below 70,000, which is last quarter's highs. Also, 2021 all-time highs was 69,000. So the 69,000 to 70,000 area is key. Once we break that, we'll likely see all-time highs. On the monthly, you have a perfect cup with handle. This move up from the lows was about 350%. See a great accumulation of the volume in this base, lower than average, multiple months of shakeouts below the 10-month moving average and reclaiming that. And this month we took out previous month's highs, still finding resistance at 70,000, but this is looking really, really constructive. On the weekly, we tried pushing higher, so this is not inside week, but you can call it a quasi inside week. Volatility has declined. We saw a couple shakeouts within this week. Now we can go to the daily. On this day, October 23rd, as well as October 25th, which is last Friday, on the war scare and Tether news scare. And both times reclaimed 66,500, and now we're floating higher. This right side is finally super tight. It's clearly shown that it's being supported from the highs to the lows is about 6%. So now we really just wait for the pivot to break, which is 70,000. And this is a huge fat pitch in my book. This reminds me of NVIDIA and SMCI in early 2024, Nikkei futures or Nikkei futures, gold, and Berkshire setups. And I'll quickly go over those right now. I think we're somewhere in this juncture right now with NVIDIA's 6-month base. You can see the move it's made so far from 50 to all the way to 140, 141 it's trading at now. SMCI, which has recently collapsed, also had its 6-month base. I'm not sure what this is. Let me delete that. So go back here. Another 6-month base after a huge run up. These are usually the best setups for me. A 6-month plus base after a massive move, like what we had in the video, which was 300% plus move before. This SMCI was about 450%. Bitcoin was 350%. From the huge sideways consolidation and breakout, and we made a 275% move. We go to BRKB, Berkshire Hathaway. No, that's not it. BRKB, Berkshire Hathaway. I'm not sure why that's not updating. We'll try going here. That one I talked about is right here. This 6-month base, about 6-month base. We made a nice breakout to 430. And then, of course, we talked about the Mac Daddy as well, multi-time frame analysis on gold a while ago. Look at this quarterly chart. This 10-year cup with handle that broke out, and gold has been up 32%, which is a massive move for gold. When we go on the monthly, you can see that cup with handle even better. Huge move up, huge base. Go on the weekly, broke out of this really, really nice, almost 2-year base. And then gold has made a huge move thus far. So that's Bitcoin. What I want to go over now is breadth. Deep market monitor continues to flash green on all the breadth indicators, which signals an environment that you can buy breakouts in. Then we go here. What I want to talk about here is, as you can see, the percentage of stocks below the 5-day and 20-day moving averages are relatively oversold. So there is some fear in the markets. We use the percentage of stocks below the 5-day, more of a short-term fear versus FOMO indicator. You can see we're all blood red. So there's definitely more short-term fear than froth. And that is good in terms of us hoping that the markets can have more room to the upside. Then when you look at the percentage of stocks below the 200-day, it's pretty much all green. So breadth is still wide, still healthy. Same with above the 150-day, above the 100-day. So long-term and intermediate-term trends are up. Going right here, still net highs in the markets. Yeah, this is S&P with overlaid or compared with the New York Stock Exchange net highs and lows. This is a NASDAQ composite, new highs and new lows cumulative mix, and this has been trending higher. Finally, we are living above the moving average, the 50-day moving average, and now trending higher. And this is the NASDAQ composite breakdown with net highs and lows. The NYSE is an oversold and in a downtrend, and same with the NASI right now, heading back to oversold. And what this tells me is that we still don't have a full easy dollar environment yet with breadth and full blown participation. But this means that if breadth does break out to the upside, you can see this VCP that Connor's highlighted before. If you break this flat tops, this could really trigger breadth expansion, coinciding with the breakout in the NASDAQ. When we go to the percentage of stocks above the moving averages of the 20-day, 50, 150, 200. Nice pullback here as we frustrate the bulls. But this just means that there's room to the upside now in terms of betting on the long side. We go to some sentiment. Sentiment has definitely come off a bit. We were almost heading into extreme greed at one point, but now we're back into the regular greed. And it would be nice to see get even some fear or extreme fear before the election. And this big earnings week coming up while the indexes hold up, while stocks set up. And that would really set up a nice alignment between fear on one hand and then setups and great price action on the other. AAII bulls come back right to historical averages. Bears come up pretty much to historical averages as well. So we love to see that sentiment has neutralized, and that does provide more room to the upside. The NAM as well pulled back to 79.113, which is good too. That 100 area is when we start flashing a more of a secondary sell signal in terms of there's froth in the markets, there's euphoria, and taking profits is probably prudent. Quickly go over the target probabilities for the Fed. FOMC is 2 days after the election on November 7th, and there's a 95% probability that we get another 25 basis point rate cut. So we'll see what happens next week with that. And of course, they say they're data dependent. We have GDP this Wednesday, PCE this Thursday, and then employment data this Friday. So I'll quickly show that on the economic calendar. Wednesday, ADP employment, GDP. Thursday, PCE, and then Friday, unemployment. And then the next week, we have the election, of course, on November 5th. Find out November 6th the results, hopefully. And then November 7th, we have that FOMC rate cut decision or rate decision. So quickly now, talking about earnings, 37% of the S&P reports this week. So it's huge. It's a huge earnings week. So many stocks to track. Of course, some of the bigger ones are Amazon, Apple, Intel, Uber, Peloton, Meta, Coinbase, Microsoft, Hood, Lilly, AMD, Google, Chipotle, Visa, First Solar. But there are so many other smaller stocks to keep track of. And it is really a treasure hunt. We like to call earnings season a treasure hunt because it provides the next biggest movers for the next quarter. We see some nice beat and raises and acceleration in earnings and revenue growth, as well as raising and guidance by management. So we went over the indexes. We just covered breadth, covered the economic calendar for next week and some earnings. And now I'll talk about some stocks. And as always, I already talked about Bitcoin. I think that's one of the biggest bullish bets in the markets right now. We are participating in GROTECTION with MSTR and some IBIT, and that is how we're playing that area. The other fat pitch I am seeing now is Tesla, and I'll do a multi-time frame analysis as well. I did this on the podcast, but we'll do it quickly here. We've had 1,000% plus move, multi-1,000% actually, and consolidated for the better part of the last 3 years. You can see some VCP action in the monthly. Really nice cheat setup here in the monthly. Going in the weekly, we are above last month's highs and above 265. This 271 high right here is last quarter's highs, and taking that out really sets us back into an uptrend. And the daily looks amazing. Earnings gap, follow through action on huge volume as well, above this handle or double bottom base high, whatever you want to call it, more of a cup with handle, loose and wide handle though. But now we're zoning in on this 271 area. Afterwards, this 300 level would be next. And then it's really blue skies. So this and Bitcoin are two of the fatter pitches and close stocks that you must track and that we are tracking in the next weeks to months. Of course, NVIDIA, number one leader, made an all-time high last week and kind of just meandering about. It did make like a 40% move in a month. So some sideways action to shake out some weak holders and late chasers, build a more symmetrical and tight right side. And this stock looks like it wants higher. Earnings in 24 days. Apple pulled back to the 21 EMA, reclaimed it, still below the 8, but building a nice right side to try to take out all-time highs. You have some VCP action. This is 4 contractions now. So this is ready. Too much more, and it might be it might be too tight for too long or too much sideways for too long. So we'll see what Apple does. Bitcoin we talked about, so I won't talk about it now. In terms of the nuclear power generation theme, BST is forming a high tight flag here, super tight on the 21 EMA and 8 EMA, above about 128.7, and that's a buy. You can see volume contracting as well, which is perfect in the pivot. Another nuclear name to watch out for. This saw highest volume ever on the Amazon power generation deal from SMRs. And right now it's flagging above previous all-time high resistance. This looks great. Over high volume close, that could be a try for this name. Some other ones like Wolf is a crypto miner, flagging near 52-week highs. Over 6.5 is potentially buyable as well. And so I don't have too much more this week. I've given you my two best ideas, which is Tesla, which we own in GROTECTION, and Bitcoin. They both have multi-time frame analysis, which I've talked about on the podcast. And yeah, we're involved in both. And we're going to take it day by day, week by week, manage risk, obviously. But we are definitely bullish in those areas. So yeah, that's going to wrap it for this weekend's weekend walkthrough. Once again, all four green up arrows means we're in the GROTECTION in the grow mindset. But we do have two big weeks coming up with 37% S&P reporting next week, election the following Tuesday, then FOMC the following Thursday, and then of course, and also we have economic data this week, which will definitely influence the Fed's decision next week and have wide consequences for the markets and the economy. So that's going to wrap it. As always, we'd like to hear from you. My email is ted@revereasset.com. My Twitter is Ted H. Zhang. You can reach out to our phone, which is 855 Real Wealth. That is 855-732-5932. And if you're interested in becoming a client, please let us know. And we offer free portfolio reviews, and we could definitely go over your portfolio with you and just get you set up with us. So this is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening, and have a great week ahead.